gains.
Okay, well, let's thank all our guests for joining us and welcome our market master for the day, Mahesh Patil, the co-chief investment officer at Aditya Birla Sun Life AMC joins us now. Mahesh, hi, good morning. Thanks so much for joining us. It's been tricky for the market these last few days, but particularly on a couple of spaces, you know, for example, metals, we've seen that big deal happen with Tata Steel. Are you positive there? Is that a space that you like?
Yes, the metal prices have been fairly firm globally if you look at it. So a lot of these companies, top players, are earning good cash flows and free cash flow generation is very strong. And there are opportunities which are coming up in the distressed asset side, like Bhushan Steel, for example. So that provides an opportunity for some of these companies to really be able to quickly deploy the cash and get, because they're operating at almost 90 to 100% capacity utilization. If you look at Tata Steel, Vedanta, Hindalco. So I think opportunity A, the global markets look fairly good. Good free cash flow generation and ability to really scale up capacity because of some of these distressed assets, I think provides a good long-term outlook over there. I mean, it's a question about what price you are buying some of these assets, okay, whether they are going to really make money in the shorter term. But I think longer term, the sector looks fairly good and poised. And I think more importantly, if you look at within the metal space, the steel sector especially, looks fairly good over there. And the production cuts, what we are seeing in China, looks like it will stay for a longer period of time. And overall global growth is also looking up. So that means that the demand pickup for some of these metals, especially with US, if it's able to go with its plans to really boost infrastructure, should be good for the metal sector from a medium-term perspective.
Mahesh, good morning. You know, if it was any other time, this news on Bhushan Steel should have led to a big rally in PSU banks. But right now we're going through, you know, complete derating. But your thoughts, whether as a fund manager you would want to buy these stocks now?
So the PSU banks, we have been a bit cautious, very selective in some of these names because a concern about some of the corporate governance issues in the PSU bank, and also while we have seen the bank recapitalization, the real reform in the PSU bank system hasn't really happened. So that has been a concern, but I think what will happen is post this event, what we have seen, there will again be a slowdown in terms of cautiousness brewing back into the sector. And mind you, these banks still need to be recapitalized. There is capital infusion which needs to happen. And as these stock prices have come off, the dilution then what will happen will be at a much lower level. So you will see a significant dilution for the kind of capital infusion which needs to be done. So I think for the time being, obviously there is a value at a certain price, okay, which will emerge in some of these stocks. But I think clearly, if not a very strong business case coming up, and overall, I think if we see more problems coming up in some of the other sectors, then I think it will take some more time for these banks to recover. And in the meantime, I think the private sector banks, I think there was some concern that with PSU banks coming back with force into the market with recapitalization, you will see them taking away market share again back from the NBFCs and the private banks. I think you will see NBFCs which have kind of underperformed recently in the last 6 months would again start to do better. If you look at the numbers also for the NBFC in this quarter, have been fairly strong in terms of if you look at the credit growth. So I think again there might be some reallocation of money within the banking sector again back to the PSU banks.
Yes. Now I'll come back to this NBFC PSU bank issue, but I want to ask you fundamentally, how are investors reacting? You know, already we saw January flows lower than, you know, December. December of course was a record. How's February been?
So I think Jan flows were some reflection of the impending long-term capital gains tax which was there. So we saw people trying to take away money, preempting that move, right? So we saw some redemptions, but the regular inflows into the equities was fairly strong, even in the Jan month. In the Feb month, still it looks pretty healthy, I would say. People are not too perturbed.
Does it compare with December, November?
No, so it will be lower than that, yeah. So I think what we saw in the November, December months, I think that number is really peak, and after that we are seeing some kind of a slowdown. I think it's very difficult to estimate at this point in time what is the impact, because there are two things which have happened. One is the long-term capital gains tax after the budget. So how will that impact? People are still trying to figure out that, because it won't have an immediate impact, but clearly a lot of money which was moving into some of these hybrid funds, and especially the low volatility products which were there. There I think, and because people are coming also because of the dividend distribution which was there, and the dividend distribution tax will entail some kind of a slowdown in money flowing into some of these hybrid products, which was also mainly coming into equity, like 60-70% of that was into equities. So, and the recent volatility what we have seen in the markets, I think that could lead to, I think, some slowdown in flows what we are seeing. Not a major thing, but and I would put the number to be around 20-25% kind of a slowdown in terms of flows what we are seeing in the month of November and December.
Okay, to come back to your NBFC question, see, marquee guys like Bajaj Finance have been moving down for the past, 8 weeks or so after it peaked out in early Jan. Is it already time to buy?
So again, I think we'll have to look at in the NBFC sector, companies which where there is clear visibility of growth, because they are in spaces where there is not much competition coming in from the large banks. So I think wherever that visibility is there, I think some of these stocks post the recent consolidation will again start to look attractive. Again, there was some concern about margin pressures because of interest rates have gone up, right? So yeah, there will be some impact of margins, but again, companies which have been able to manage the liability side much better and have got access not only to bank borrowing but also to other deposits should be able to weather this much better. And again, there was concern about high valuations in some of these NBFCs. So I think wherever some of the combination of these things have now corrected to a reasonable level, again the compounding of these stocks looks to be fairly strong. So while even if the valuations are slightly higher, but if you take a 3-year view in some of these very strong NBFCs, then I think post the consolidation and some market correction, I think they'd still look fairly strong.
Okay, well, for now the space to be in is metals, so not just Bhushan Steel for reasons well known, but others like Vedanta, SAIL, JSW Steel, Tata Steel, Monnet Ispat, all of them are up about 1 to 3% odd. But we discussed metals, so let's discuss some other pockets as well, Mahesh. This year has been very good for IT. It hasn't been good for the market on the whole, but IT stocks have gone up about 8 to 15% so far in the first 2 months. Is that a space that you like?
Yes, the IT sector is starting to look interesting at this point in time. We are seeing some kind of improvement in terms of, I think in fact this quarter itself, if you look at the last quarter, the IT companies, the numbers were fairly good. We have seen some marginal upgrade to earnings. This is one of the few sectors we have seen slight upgrade to earnings. And I mean, this year there is a feeling that you should see the growth number should be better than what it was last year. I think with US doing very well and with discretionary spends increasing in the US on back of very strong profitability, especially in the banking sector, I think we should see an uptick in volume in the overall IT space. And if rupee at these levels also provides some kind of a tailwind over here, because we've seen the current account deficit which came in recently was slightly negative. So I think the sector should do fairly well from these levels, though we still don't see a very strong growth coming back. I think the growth would probably improve around 2 to 3 percentage points in terms of volume growth. Overall, the sector would still remain a kind of a moderate growth sector, but clearly the stability in the sector looks fairly good, so we would see low volatility over there. So at times where market volatility is higher and there are concerns about some downward correction, I think the sector should be able to outperform.
Okay. By the way, once again, I just want to point out the other stock which is making highs of the morning, is South Indian Bank. And again, because it's a bank where the Bhushan Steel exposure is 20% of its NPA, and that's getting resolved, and it's fairly big for that bank. So even yesterday in a weak market, it outperformed, and today also that stock is doing well. So just keep this one on your radar. But I just want to come back to the big point now. All through this correction, we've been wondering this big, large mutual fund inflows, SIPs, lump sum. Is that going to continue? Because we've already seen 1 month of downtick. Now you can't make assumptions based on 1 month. But do you think that money could be at risk?
So if you break down the mutual fund inflows into various pockets, so we are getting almost like 8,500, 9,000 crores of inflows which will be coming in this year, which is more recurring in nature by way of SIPs than money moving into EPFOs and some of the NPA schemes. So that number looks to be fairly steady and growing. In fact, this book is also growing very fast. So I would say almost 50%, 40-50% inflows look to be fairly steady and coming in, and that money should not get impacted by short-term volatility. I think overall the outlook on the market still remains fairly strong. And we are entering into a phase even globally where growth is looking strong. It's not like a bearish market as one is looking at. It's more of a correction is what we also feel, and that's what investors are also believing. I mean, unless you have an extended period of very down markets, which we don't see that happening. So in that scenario, I think we should still see fairly strong inflows coming in. There is, as I said, the penetration of the market is increasing. The inflows coming in from the below top 15 cities or the below top 30 cities is also growing. So I would say there will be some moderation in inflows from what we have seen. But I would still bet that around 15,000 crores of monthly inflows would still come in. I mean, as long as the markets remains fairly, we see some minor correction from these levels. I think it should not really deter long-term investors.
Okay, that's a positive note. Thank you very much, Mahesh Patil, for joining us and taking us through your views on the market. Okay, probably a incremental fall in the inflows into mutual funds, but it is inflow, and we are still talking in the range of 15,000 crores, perhaps not the 20,000 crores we got used to in 2017. But these could still be early days. For the moment, the markets have bought the first